News. Joining us now, Steve Wesley, founder of the Wesley Group and a former Tesla board member. Steve, it's great to have you on, and let's start right there. I just used the phrase, I'm going to put it to you, comeback kid for Tesla. Is it warranted?
Well, we'll see. Look, 2026 is going to be a pivotal year. Share price today, record high, $1.5 trillion. But Tesla is likely to see the second year of declining sales and shrinking profits. So they've got to get robo-taxi approval, and they've got to move beyond 2 cities. And that still is going to leave them way behind Waymo. So regulatory approval in more cities, more revenue growth, they're going to have to bend over backwards to keep that share price up.
How to think about that competition between Tesla and Waymo? I realize Waymo has logged many more hours, but Musk and Tesla have come out and said the way we've built these cars, superior, we can make more money on them as we roll out the robo-taxis. How to gauge it?
Well, the way to gauge it is 2 things. You look at regulatory approvals and the time between critical interventions. So Tesla robotaxis go about 1,500 miles between critical interventions. That's where something's wrong enough where you have to pull over on the side. Waymo's get about 17,000 miles between the critical interventions. So they're way ahead technologically at the moment. Waymo's in 20 markets by the end of 2026. They did 14 million rides, or will do 14 million rides this year. I think moving to about 35 million next year. So look, Tesla in 2 cities still requires safety drivers. They got a lot of ground to make up.
Hey, Steve, it's Dom. I wonder, with the stock right now hovering just around record highs, if not hitting record highs just in the last couple of weeks or so, what is the catalyst that you see needed for investors to continue that story in 2026? You mentioned some of the benchmarks you're looking at, but what exactly is the roadway in terms of what they need to deliver quarter by quarter for investors to keep saying, we're going to keep the stock, we're going to keep bidding it up?
Look, I think they got to see a few things. They have to see more growth. I think it's lower cost models, but they need to prove that they can grow in new areas. And one of those areas is their energy division is booming. Major provider of power walls, mega packs, energy blocks for utilities. And there's a revolution going on in AI and data centers, and it's forcing utilities to look for new power suppliers. Tesla right now is filling that void. Energy division will grow from about 10 billion last year to 14 billion this year. That's 40%. They can keep up that growth. The energy division may be that spark they're looking for.
Yeah, it's distributed power, Steve. Hey, it's Brian Sullivan. It's like billions of minutes of electrical power rolling around on batteries. That's the way to look at it, because somebody's looking at it in a big way. Tesla's market cap is larger than every American car company combined. You can even throw in a couple of French companies or whatever's left in Europe, by the way, on top of that. But what did the market get wrong? In mid-March, Tesla was at $222 a share. Politicians were kind of dumping on it, making fun of Elon Musk. That literally ticked the bottom. The stock has more than doubled since then. What changed in the sentiment since mid to late March?
So that's the trillion-dollar question, because again, you're seeing flat-ish growth. What the heck happened here? I think what people are believing is that Tesla is on the cusp of delivering full self-driving. And again, getting full testing in Texas without drivers is a big step forward. But they need more. This energy thing is going to be huge. People are beginning to realize car companies aren't just car companies anymore. They have to be technology companies. They have to be energy companies. Don't take my word for it. Look at big firms like Vistra last year, one of the world's largest independent power providers, had a faster growing stock than NVIDIA. Tesla has this division of energy products, power walls. You've seen them in garages, but now these mega packs for utilities and these big energy blocks that can provide up to 20 megawatts of power. That's a real difference maker for the company. So if they can prove this new technology offerings are real, that's going to give them a boost.